While we still hear anecdotes about multiple offer scenarios in much of the country, and inventory is super tight, it's climbing, but not quickly. This assessment seems a bit fragile. It seems like we can see the impact of a month of 7% mortgage rates very subtly in the data now. Just a slight slowdown in the sales rate and a few more price cuts across the country. Mortgage rates have been stubbornly high, around 7% for about a month. And we already had an affordability challenge compared to 18 months ago. So every move higher with mortgage rates eliminates some demand from buyers. Buyers all year have been surprisingly resilient compared to last fall. So what we're looking for is where that affordability threshold starts to turn the market down again. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, and all the changes in that data, and we make it available to you before you see it in the traditional channels. That's why we're looking in the data right now to see how fragile this real estate market is in the face of consistently higher mortgage rates. I'm Mike Simonsen. I'm the founder of Altos Research. And let's look at the data as we approach the peak of home buying season, mid-June 2023. There are now 451,000 single-family homes available, unsold, on the market across the U.S. That's up 1.8% from last week. The supply of homes remains incredibly restricted. Remember that we started 2023 with 70% more homes on the market than a year earlier? Well, there are now just 7.7% more homes on the market. That gap has been narrowing all year. And if mortgage rates spike, home buying demand seems very sensitive and poised to slow again. So we could lose momentum very quickly. Last summer in September, for example, rates spiked to 7.5%. And at that time, we had a very unusual jump in inventory and a price decline late in the year. So keep your eyes out for that. If rates fall from here, expect resumed bidding wars for the end of the summer and declining inventory even further. As of right now, we are expecting to finish 2023 with 10% fewer homes on the market than when we started the year. We'll see how that projection changes in the second half of the year, if those trends hold or if new macro forces take over. We always look for weakness to show up in the data, demand weakness to show up in the data in the price reductions. So after a month of 7% mortgage rates, we might just be seeing the first inklings of weakness this week. Price cuts have been very slow to rise this year as we've had more demand than supply of homes. And while last year at this time, you could see dramatic cooling in the market in the price reductions data, this year is much more subtle. 31.4% of the homes on the market have taken a price reduction. That's up 70 basis points from last week. Last year's weekly change was 170 basis points. In previous years, though, we might have seen just 50 basis point change in the middle of June. So this week's change means slightly more price cuts than recent weeks, and also slightly more than many of the pre-pandemic years. Though price cuts are rising much more slowly than last year at this time. Right? So it's a subtle change in demand. In this chart, the dark red line is the curve of price cuts for this year. When we look at all the homes on the market, how many have taken a price cut? The steepness of this line is how quickly the market is changing. Last year's light red line was rising super steeply. From that slope, we could tell that demand had stopped, that home sales prices in the future would be declining because we could see the demand had weakened already. That's not true today, though. Like I said, maybe we see the first signs of that changing market. Home prices are at their peak for the year at $455,000 for the median of single-family homes across the country. That's basically unchanged from last week and is about 1% lower than where it was last year at this time. Ultimately, if home prices finish 2023 unchanged from 2022, it's about as positive as could be imagined coming into the year. If the prices shown here are the median for all single-family homes on the market, and this leads the future sales prices because these are homes on the market now that will then get offers and sell. Sales will complete in the future. The median price of the new listings is $419,500. That's the light colored line here. I'll be watching this leading indicator to see if by July it isn't back above the 2022 level. Last year in July, that's when home prices took their first big steps down. In July, we always see down seasonal steps for the new listing prices. So we'll see how steep the change is this July. Do home buyers keep up the momentum from the first half of the year, or do they stop as quickly as they did last year in the face of rising mortgage rates, higher mortgage rates? The median price, meanwhile, the median price of the homes in contract, the pendings, is now $385,000, which is up over 1% from last week, and is now also unchanged from a year ago. So we've made up the decline from the late last year. The price of the homes in contract was falling by this time last year, and it's still rising now. So this is like the momentum of the market demand from the spring is now in the pendings and is a signal of price support for sales that will complete in July and August. When we look at the total rate of new sales, though, it's dropping. So we passed the annual peak of sales volume, and this is one of those places where we can probably see the impact of the 7% mortgage rates. There are now 386,000 single-family homes in contract with only 65,000 new pendings this week. The new sales rate is 21% fewer than last year at this time. So that's going the wrong way. I've been optimistic that we'd close the gap with the sales rate from last year by the third quarter, but now it looks like if we stay in a world with 7% mortgage rates, and that looks like that may not happen. We may not get that sales volume back again. The sales rate is slow enough that transaction volume isn't accelerating anymore. In this chart, the height of the bar is the total number of homes in contract any given week. The light portion of the bar are those that are newly in contract. And at the far right end of the chart, you can see how that sales rate is declining now. And this is really a signal of the impact of those mortgage rates. So it's impacting the sales volume, but only maybe just in the sales in the prices yet. If you follow these videos, you know that I talk about immediate sales. So as an indicator of demand, those homes that get offers within hours or just a couple days of listings, in the 4 weeks since mortgage rates ratcheted up to 7% or more, the percent of the new listings that go into contract immediately has ticked down every week in that month of 7% mortgage rates. So just a little slower, and it's an indication that buyers are slightly less eager to snap up the homes as they get listed. When I want to understand if demand is weakening, I like to look at the percentage of the new listings that go into contract immediately. This chart is that percentage over time. I've highlighted where last year we could see demand had frozen up and you could see that immediate sales percentage was dropping, plummeting. I've also pointed out where last September the immediate sales rate was at its low point, exactly when mortgage rates spiked the highest. The likelihood that your listing gets a same-day offer climbed this spring. But like clockwork, with the latest mortgage rate spike a month ago, those offers have slowed. So see at the far right end of this chart, 4 weeks in a row of declining rate of immediate sales, right when mortgage rates jumped. And so each week, a few more people decide not to bid on that house, preferring to wait to see if mortgage money gets cheaper first. So to many sellers, though, they don't notice this yet because the best homes at the right prices still have buyers, but you can start to put together the pieces. So each week, a few fewer people make those bidding wars, a few fewer homes go into contract, and those that didn't get their offer, a few more of them start to do price reductions. And so this means slightly less price support for sales prices in the future. These are subtle changes in the demand right now, but they're worth watching as we try to understand whether this year's minor resurgence that we had in the housing market has legs or whether it will wither at the slightest jump in the cost of money. All right, never a dull moment in the real estate market. But the basic fact remains true. Home buyers and sellers need to know what's happening right now. They have a lot of opinions, a lot of noise to filter, and they need you to give them the actual data as soon as it becomes available. If you need to communicate about what's happening in your local market as it happens, go to altosresearch.com, book a free consult with our team. We'll help you interpret the crazy market for your clients right now. It's a critical time to be informed about the market, so please join us.